Welcome back to Investing Talk podcast, where we distill essential sources into key insights. Today, we're zeroing in on Coty's upcoming earnings to watch. Our mission today is really to unpack the pre-earnings analysis for Coty. We're looking at the key data points, the historical context, and, potential future scenarios. We want you to get quickly well-informed on what matters most for this report, sort of understand the story behind the numbers, not just the numbers themselves. And hey, before we jump in, if you find this breakdown helpful, please subscribe, like, and maybe leave a comment. It really helps us bring you more of these analyses. Also, if there's a specific company you'd like us to look into, definitely let us know in the comments below. We do read those.
Exactly. And we'll guide you through the latest information we could gather from various trackers and analyses. We'll highlight what seems most important as Coty gets ready to report its Q4 fiscal year 2025 results. We'll explore the consensus numbers, look at the past performance a bit, and, talk about what a bullish or maybe a bearish outcome might look like.
Okay, let's get into it then. For Coty, what are the core details we need to know about this upcoming earnings report? When is it actually happening, and what are analysts predicting?
Right. So Coty is expected to report its Q4 FY 2025 results on Wednesday, August 20th, 2025. Now, some trackers vary slightly on timing, but Nasdaq currently flags the release as after market close. Then there's a conference call scheduled for the next morning. That's Thursday, August 21st at 8:00 a.m. Eastern Time.
After market close, call the next morning. Got it. And the numbers, what's the consensus looking like?
Okay, so in terms of analyst consensus expectations for this quarter, revenue is projected to be around $1.2 billion. And for earnings per share, or EPS, the consensus stands at 0.02 cents, just 2 cents.
2 cents EPS, $1.2 billion revenue. That seems, well, it's a clear picture of what the market's looking for anyway. Did our sources provide any indication of like a whisper number, that unofficial street expectation? Or maybe the company's own specific guidance for this quarter?
Yeah, good question. But no, unfortunately, our cited sources don't really provide a credible whisper EPS. A whisper number, for those listening, is sort of that unofficial forecast that sometimes circulates among traders, often different from the main consensus. We couldn't find a strong signal for one here. And for company guidance, these calendars and trackers, they don't include Coty's specific guidance ranges for Q4. They just show the consensus expectations.
Ah, okay. So management's formal figures aren't in this material we reviewed. We're mostly working off the analyst views then.
Pretty much, yeah. For this specific quarter's numbers, it's mainly the external analyst predictions setting the stage.
All right. Knowing what's expected is one thing, but how has Coty performed historically? Especially thinking about that last quarter. Does the past give us any clues here?
Well, looking at the most recent recorded quarter, that was Q3 FY 2025, reported back in early May, Coty actually missed expectations then. Earnings per share came in at $0.05. That was against a consensus of $0.05. So quite a miss on the bottom line.
Oof, 1 cent versus 5. Yeah, that's significant. What about revenue?
Revenue was $1.30 billion. That was just slightly below the $1.31 billion consensus. So closer, but still technically a miss.
So a miss on both fronts recently. That probably didn't sit too well with investors. What about the quarters before that, or, how the stock reacted right after those reports? Do we have any info on that?
Unfortunately, the trackers we looked at don't detail the beat-miss outcomes for the 3 quarters before that Q3 miss, and they also don't specify the immediate next day price reactions for the last 4 reports.
Okay, so that data is a bit thin.
It is. What we do know about key metric trends, though, is that Q3 FY 2025 revenue, it notably fell 6.2% year over year, came in at $1.30 billion. That year-over-year decline is definitely something to keep in mind. Broader trailing metrics, things like margins, operating income, or segment trends, those aren't detailed in these sources either. So our view is kind of limited to that recent top-line weakness.
Right, that 6.2% drop year over year in Q3. That sets a bit of a cautious tone, doesn't it?
It does, yeah. It raises the stakes for this upcoming report to show some stabilization or at least explain that decline.
Okay, that gives us a decent sense of the recent past. Now, stepping back a bit, were there any big company-specific news items or maybe broader sector trends happening during this past quarter, Q4, that might really impact these results? This is where things can get interesting.
Well, the earnings tracker pages themselves, they don't typically summarize quarter-specific company announcements or, provide deep dives into sector and macro trends. They mostly aggregate generic headlines. We didn't see specific operational catalysts relevant to this quarter highlighted in the source material we used. So no mention of a major product launch impact or a big market shift directly noted there.
Okay, so no smoking gun from the news flow in these particular sources.
Not directly flagged, no. However, what we can gather from looking at analyst commentary aggregated elsewhere, like on MarketBeat, is a consensus view for forward EPS growth. That's looking beyond this quarter. MarketBeat notes earnings are expected to grow from 39 cents, presumably for the full fiscal year that just ended, to 71 cents next year, fiscal 2026.
Okay, wait. From 39 cents to 71 cents, that's what? About a 30% jump?
Yeah, approximately 30.77% growth expected next year. So despite the recent Q3 miss and that revenue decline, analysts are, on average, forecasting a pretty significant earnings recovery or acceleration going forward.
That is interesting, a big contrast there. Do the sources mention any recent analyst upgrades or downgrades specifically tied to this upcoming report?
No, the sources we reviewed don't specifically list out recent analyst rating changes connected directly to this Q4 print. We just have that broader forward growth expectation.
Gotcha. So a recent miss and revenue dip, but a hopeful outlook for next year. That's definitely a mixed picture. Okay, let's shift gears to the stock itself. How has Coty's stock been behaving leading up to this report? What's the technical setup look like?
Well, we have a snapshot from MarketBeat showing Coty trading at $4.72 as of the close on August 11th, 2025. There was only slight fluctuation in extended hours mentioned, so that gives us a recent price point. But importantly, the sources don't provide a broader characterization of the pre-earnings trend. Like, we can't definitively say if it's been running up strongly into the report or if it's been selling off. That context is missing.
Okay, no clear pre-report momentum signal then. What about options data? Things like options skew or call put ratios. Sometimes that gives a hint about sentiment.
Right, those can be useful indicators. But again, we don't have information on option skew or call put ratios from the cited pages. Those metrics often show how options traders are positioning, maybe hedging downside or betting on upside. And
Right.
crucially, there are no explicit pre-earnings implied move or implied volatility metrics listed in these sources.
Ah, okay. And remind our listeners, the implied move, that tells us what exactly?
Yeah, the implied move derived from options prices. It basically tells you how much the market expects the stock to move up or down right after the earnings report comes out.
Yeah.
It's the market's baked-in expectation for the size of the reaction.
So without that number, we don't really know if the market's bracing for a big swing or just a minor wiggle post earnings.
Exactly. The absence of that data, along with the skew and ratio info, means we're kind of flying blind on how the options market is pricing this event specifically.
All right, so we've got the consensus numbers, the shaky recent history but hopeful future outlook, and not much clear signal from recent trading or options. Quite a setup. With all that information, or maybe lack thereof in some areas, what does this all mean for potential scenarios when Coty actually reports? What would a bullish outcome look like here? And what about a bearish one? What should you be watching for?
Okay, let's break that down. For a bullish case, the key phrase is often beat and raise. A beat means doing better than expected, and a raise means lifting future guidance. So ideally, you'd want earnings per share clearly above that $0.02 consensus, and revenue probably needs to be at or maybe slightly above the $1.2 billion mark. But honestly, just beating this quarter might not be enough given the recent history and that big growth expectation for next year. Critically, we need constructive commentary, positive signals for fiscal year 2026, something that really supports that market beat view of, roughly 31% EPS growth next year. Maybe management reiterates or even boosts their outlook on margins or top-line growth. That forward guidance is huge.
So beating the low Q4 bar isn't enough. They need to really sell the story for next year, too.
Precisely. And other bullish drivers could include signs of stabilization or even better actual growth compared to that 6.2% year-over-year revenue decline we saw in Q3. If they can signal a re-acceleration heading into the new fiscal year, that would be very positive.
Okay, that makes sense for the upside case. Now, on the flip side, what would trigger a negative reaction? What defines the bearish scenario here?
Well, a bearish case would likely start with another miss. If EPS comes in below 0.02 cents, or if revenue misses that $1.2 billion mark, or both. And if that is coupled with soft forward guidance for FY 2026, that would really echo the disappointments from Q3, the miss, the revenue decline, the whole package. That kind of outcome could risk further what's called multiple compression for the stock. That just means investors might become less willing to pay the current price for each dollar of Coty's earnings, pushing the stock price down.
Right. Even if the business isn't falling apart, sentiment could sour significantly.
It's exactly. Any indication of continued sales softness, maybe ongoing struggles in certain product lines or regions, or pressure on gross margins, that would almost certainly weigh on sentiment. especially after that Q3 revenue drop. Really, the single most important metric to watch, given everything we've discussed about that forward growth, will be Coty's guidance for FY
Right.
2026, the EPS and revenue trajectory they lay out. Investors are going to be laser focused on whether management's outlook aligns with or hopefully exceeds that expected growth from $0.39 to 51 cents next year. That's the real test.
Okay, crystal clear. Guidance for FY26 is paramount. So, putting it all together, what's the overall leaning from this analysis, especially considering those gaps in the data? Neutral, bullish, bearish. And how might you think about approaching this earnings event? What's your confidence level?
Yeah, based on the sources we have, the overall leaning has to be neutral. It's just such a mixed setup. You've got the recent quarters miss and that year-over-year revenue decline at definite negatives. But then the consensus for this upcoming quarter is quite low at just 0 or so 2 cents per share. That's potentially a low bar to clear. And then you have those significant expectations for next year's EPS growth. Plus, the limited visibility on whisper numbers, the lack of implied volatility data, and no clear pre-earnings momentum signal in the stock. It all points towards a neutral stance going in. The market doesn't seem to have a strong conviction baked in based on this data.
Okay, neutrally, and what about your confidence score on that 1 to 10 scale?
I put the confidence score to 4 out of 10. It's not a high conviction call, mainly because of those data limitations we discussed: no whisper number, no implied move, unclear recent price action. The Q3 miss and revenue decline definitely temper confidence, make you cautious. But that low Q4 bar and the strong FY26 growth expectations, they prevent us from being outright bearish. It really feels like the outcome could swing either way based on the actual report and guidance.
A 4 out of 10. So, caution is warranted. Given that, what about trading strategy considerations? How might someone approach this, depending on their risk tolerance?
Okay, sure. For a risk-averse approach, probably the most prudent thing is just to wait. Wait for the report and the guidance to actually be released. See how the market reacts initially, and then consider trading the post-earnings trend once a clearer direction is confirmed. This seems especially sensible given the uncertainties around how much the stock is expected to move, that missing implied volatility, and that recent history of missing expectations. Why guess if you don't have to?
Wait and see. Makes sense for the cautious investor. What about for someone who is more risk tolerant? Maybe someone who likes playing earnings events.
Well, for those comfortable with more risk, event-driven option strategies could be considered. But, and this is a big but, you'd absolutely need to check the live option chain pricing yourself right before trading. For example, if you lean slightly bullish and expect a modest beat with decent guidance, maybe a defined risk long call spread. That involves buying one call option and selling another at a higher strike price, limiting your potential loss but also capping your gain. Or if you're bracing for another miss and weak guidance, maybe a put spread. That's buying a put and selling another put at a lower strike. Again, defined risk for a bet on a downward move.
Call spreads for upside, put spreads for downside, both with defined risk.
Right. But crucially, because we don't have that quoted implied move from our sources, you must verify the implied volatility yourself from live market data. This tells you how expensive the options are, reflecting the market's expectation of movement. If implied volatility is really high, the price you pay for the options might be too expensive, making it hard to profit even if you guess the direction right. So check that IV before putting on any options trade around earnings.
Excellent point. Don't overpay for the options, especially when the expected move isn't clear from our prep work. That's a really thorough breakdown of what to look for with Coty's upcoming earnings. It really highlights how you piece together the puzzle, even when, some pieces are missing from the specific sources you have. And as you reflect on all this, here's a final provocative thought for you to mull over. Given that significant expected EPS growth for next year that 30% jump analysts are forecasting, how much pressure is really on Coty's management to deliver truly compelling fiscal year 2026 guidance? And beyond just the headline numbers, what specific details or commentary might actually signal that a genuine reacceleration is underway, convincing the market it's for real this time? Something to think about. Thank you for joining us for this session of Investing Talk podcast. We look forward to helping you unpack another complex topic very soon.